Hello everyone, and welcome to today's Excel tutorial. Managing finances effectively is critical for any business. Planning banking transactions is one of the biggest challenges faced by owners and finance departments. A bounced check can harm your business's reputation, while idle money sitting unused is a missed opportunity. By forecasting when funds are needed to pay creditors or cover checks, you can take proactive steps to arrange funds and avoid last-minute stress. The key is managing receivables and payables efficiently to prevent cash flow problems. Today, I'll show you a simple and practical solution using MS Excel to plan your finances and avoid these issues. Let's get started. Here is an MS Excel table designed to record all actual and expected financial transactions along with their dates of occurrence. This data is then processed to calculate the daily balance, providing a clear picture of your cash flow. Let's take a look at an example of the types of transactions that should be included in this table. Let's begin by entering the data as the first step. 1. In the date column, type the date of the opening balance. 2. In the description column, type opening balance. 3. Enter the amount of the opening balance in the amount debit column. Now, let's create a formula to calculate the balance. 1. In the balance column, click the first cell corresponding to the opening balance, press the equal sign, select the cell with the opening balance in the amount debit column, and press enter. This will record the initial balance. 2. To calculate the cumulative balance for the next row, move to the cell directly below it in the balance column, press the equal sign, select the balance cell directly at. Press the plus sign, type an open bracket, and select the cell in the amount debit column of the same row. Press the minus sign, and select the cell in the amount credit column of the same row. Close the bracket and press enter. This formula will calculate the cumulative balance by adding debits and subtracting credits row by row. Copy this formula down the column to complete the balance calculations for all rows. Here are the main 4 steps. 1. Prepare the source data to copy the data. 3. Paste into the formatted table. 4. Sort the data by date. We've now organized our data in a well-formatted table. Next, let's identify the dates or months where there's either a shortage or an excess of funds. To do this, we'll use the powerful pivot table tool in MS Excel. This tool helps us pinpoint the specific dates where funds fall short or where there's a surplus, enabling us to manage our finances more effectively. Now let's dive in and see how we can create and use a pivot table for this purpose. Creating a pivot table in Excel. 1. Position the cursor. Click on the cell directly below the column header labeled Dates to ensure Excel selects the correct range automatically. 2. Navigate to the Insert tab. Go to the top menu bar and click on the Insert tab. 3. Click on Pivot Table. On the left side of the ribbon, click on the Pivot Table option. This will open the Create Pivot Table window. 4. Select the data range. In the Create Pivot Table window, ensure Select a Table or Range is selected. Excel will automatically detect and highlight the range of your data. 5. Choose the location for the pivot table. In the same window, select New Worksheet to place the pivot table in a new sheet. 6. Click OK. Once everything is set, click OK, and your pivot table layout will be created on a new worksheet, ready for customization. In a large company, annual financial transactions can easily number in the thousands. Tracking and managing these transactions manually can be overwhelming, especially when trying to anticipate whether an upcoming date or month will remain within manageable financial limits or result in idle funds. This is where the pivot table becomes an invaluable tool. It helps us quickly identify critical financial patterns, such as dates or months, with potential shortages or surplus funds. By using a pivot table, we can efficiently analyze and manage our finances, ensuring the company operates smoothly and avoids unnecessary risks. Let's explore how to use this powerful tool to safeguard the company's financial health. 1. Click on the Date field in the Pivot Table Fields pane. This allows us to analyze financial data by date or month. 2. Notice that individual dates appear as row labels in the table. Since managing data by individual dates isn't practical, we need to group them into months for a clearer summary. 3. Place the cursor on any date in the pivot table, right-click and select Group from the menu. 4. A grouping window will appear. Check that the starting and ending dates are correct. Excel usually selects them automatically. 5. Select Months as the grouping option and click OK. 6. Instantly, the pivot table consolidates individual dates into a neat month-wise summary, making it easier to interpret and manage. 1. Let's start by renaming the row label to Date. Simply double-click on the row label and edit it. 2. Next, from the pivot table fields, drag the field Amount Debit to the Values area. You might notice it displays as Count of Amount Debit by default. 3. We need to change it to Sum. To do this, click the drop-down arrow on Count of Amount Debit under Values and select Value Field Settings for 4. In the window that appears, choose Sum instead of Count. 5. While in the same window, click on Number Format at the bottom to format the numbers. Choose Accounting and set the symbol to None to remove currency symbols. Click OK to apply. 6. Repeat the same process for Amount Credit. Drag it to the Values area, change to Sum, and apply the same formatting.
Let's now create a cumulative balance field to identify months with excess or insufficient funds. 1. Start by clicking on the Analyze tab in the Pivot Table Tools. Under this tab, find and click Fields, Items, and Sets, then choose Calculated Field from the drop-down menu. 2. A new window will appear. In the Name box, type Balance to label the field. 3. In the Formula box, after the equal sign, select Amount Debit, add a minus sign, and then select Amount Credit. This formula calculates the difference between monthly debit and credit amounts. Click OK to save. 4. Instantly, a new column titled Sum of Balance will appear in your pivot table. This column shows the difference between the total monthly debits and credits. 5. Now let's convert this column into a cumulative balance. Place the cursor anywhere in the Balance column, right-click, and from the drop-down menu, choose Show Values as 6. From the submenu, select Running Total in 7. A small window will appear asking for the base field. Make sure Date is selected and click OK. 8. The Balance column will instantly transform into a cumulative balance, showing the running total for each month. Now that we have the cumulative balance, we can clearly see which months have excess funds and which require additional resources. This helps us make informed financial decisions effortlessly.
Suppose we are in January 2024 and the pivot table indicates a negative balance of 4,060,000 for February 2024. Ignoring this shortfall could lead to bounced checks and serious consequences for the business. Let us see how to handle this effectively using pivot charts and a timeline. First, let us create a pivot chart to visualize the data more clearly. 1. Click on any cell within the pivot table. 2. Go to the Analyze tab in the toolbar. 3. Select Pivot Chart and choose the 3D bar chart option. 4. Now, customize the chart to make it more visually appealing. Scroll through the available chart styles and select the one with a black background. This style enhances clarity and ensures better presentation. Next, let us insert a timeline to analyze data across multiple months. 1. In the Analyze tab, click Insert Timeline. 2. A small window will appear. Select Date and press OK. 3. The timeline will now appear on your sheet. Use it to select multiple months together. For this example, select 4 consecutive months to get a clearer picture. Here's what we observe. January has a positive balance and is safe. February shows a shortfall with a negative balance. March and April return to positive balances, indicating no immediate concerns. Now let us focus on February and address the shortfall. Begin by reviewing the schedule table to identify transactions labeled as checks to be issued. These are checks prepared for suppliers but not yet released. Adding such checks to your schedule with tentative dates is a proactive way to manage cash flow issues. 1. Filter the table by the category column. 2. Select checks to be issued. 3. If there are any checks under this category, use them strategically to cover the shortfall. 4. In this example, there is one cheque under cheques to be issued. The supplier is ABC Private Limited and the cheque value is 4,80,000 rupees. 5. Reschedule this cheque to March 30th, a period with no shortfall and a stable financial position. 6. Return to the pivot table to check the updated status. You will see that the previously negative balance for February has turned positive, effectively resolving the issue. By rescheduling, you can avoid a shortfall, ensuring smooth financial management for your business. We have successfully adjusted a cheque to manage a shortfall by rescheduling its date to March 30th. Now the pivot table shows that our financial schedule is stable and tension-free until the end of April. Let us extend the analysis to the end of May. The pivot table highlights a negative balance of 4,75,000 rupees for May. To address this, we need to review the main schedule for any cheques that could be moved to subsequent months. Unfortunately, the remarks in the schedule confirm that all May cheques are fixed on agreed dates. If no further receivables are expected and rescheduling is not an option, we must arrange funds from external sources in advance. Here is how we proceed. 1. If funds are to be arranged, record an entry in the schedule as outside fund at 8% for 5 lakh rupees dated May 30th with a repayment plan before September 30th. 2. Enter a repayment entry dated September 15th for the same amount, 5 lakh rupees. 3. Refresh the data to update the pivot table. When you return to the pivot table, you will see the previously negative balance for May has turned positive, indicating the issue has been resolved. Be diligent with the arrangement and repayment dates to ensure smooth financial management and avoid future complications. Now let us review the remaining months together. The pivot table shows that June has a negative balance, indicating a shortfall of 7 lakh rupees, while July, August and September are cushioned with positive balances. To address June's shortfall, 1. Check the schedule for June and look for any transactions labelled as cheques to be issued that can be rescheduled to subsequent months. 2. Identify and mark these cheques. Refer to the remarks column for additional details. 3. In this example, move 2 cheques issued to Tools India Limited, valued at 4 lakh rupees and 3,50,000 rupees to July 30th. Once the adjustments are made, refresh the data and return to the pivot table. You will notice the negative balance in June is now resolved, ensuring the financial schedule is back on track. This approach ensures smooth cash flow management and avoids any potential disruptions. As a final step, go back to the data schedule and sort it carefully to check for any negative balances that might exist between individual days within a month. If you find any, adjust the cheques to be issued by rescheduling them to the end of the same month. This adjustment ensures smoother cash flow since the pivot table already shows no negative balances for the months. After making the changes, sort and save the data to keep your financial schedule well organised and up to date. Thank you for watching this video. If you found it helpful, don't forget to like, share and subscribe to our channel. Hit the bell icon so you don't miss any future updates. Together, let's simplify business planning with the power of Excel.